Hi Year 12, welcome back to Term 2. Today we're going to look at financial institutions. It's not going to be an overly long lesson, but I'll also give you an opportunity to go through and just continue with your notes and just get up to date with that. Now, last term we looked at the role of financial management, so we finished that. We looked at the strategic role of financial management, the different objectives, and those objectives are going to come up later on when we're looking at our ratios. We looked at the interdependence with other key business functions and why they're important, and we know that that question comes up regularly, so that's something you need to make sure that is in your notes explicitly. We looked at the internal sources of finance and then the external sources of finance. So you just need to remember that we've got debt, which we borrow from others, and then equity, which is still within the business, but we have to pay it back in some form. Today and this week, we're going to look at financial institutions, then the influence on government, and our global market influences. So by the end of this week, we would have finished these 3 dot points here, and then we will continue with our ratios. Now, what I've put together for you is a schedule of what we're going to do over the next 6 weeks. So if you are maybe not at school or you are not available during the lesson that we have, I just need you to know what we're actually going through. So like I said to you last term, your Canvas activities and your Canvas lessons, they're going to be split up in these numbers. So we've already done 1, 2, 3, and 4, and we start with 5, 6, and 7 this week. Now, the reason we don't have a 4th lesson is because we don't have class on Monday, which was a pupil free day. So what you'll see is that schedule. Just keep an eye on it. You might want to print this out and then tick it off, just so you are confident that you've completed and covered all the work. Today we're going to look at financial institutions, as I mentioned earlier. Now, I guess with the financial institutions, you may be asked some multiple choice questions on maybe there's a definition and you need to provide the marker with which financial institution it's talking about. It may come up in a short answer question. It might also come up in an extended response or business report where they actually ask you which financial institution, should this business go to? Where is the best place for them to get their funds from? So we have our banks, investment banks, finance companies, superannuation funds, life insurance companies, unit trusts, and the Australian Securities Exchange, and we'll go through each one of those. Now, the reason why these financial institutions are so important and crucial within the business is because that's where they get their funds from. Businesses get their funds because they want to start up a new venture, they want to invest in new plant and equipment, or they choose or they want to grow, and they can only do that with added funds. So the first one that we've got are banks. These are the most recognised ones: Westpac, CommBank, ANZ. Now that's the main source of finance for individuals and small businesses. Once a business gets bigger and bigger, they have to look at other options. Now, I guess with the banks, they provide short-term finance, so the overdraft, long-term finance, mortgages. Banks receive savings as deposits from individuals, businesses, government, and it's really crucial. It's really crucial for these businesses. Now, if a small business can't get a loan from a bank for any particular reason, they might have to look elsewhere, and that's actually going to cost them more money in the long term. Now, investment or merchant banks. Macquarie Bank's an example of that. This is where medium to large businesses acquire their funds from. So this is not for your mum and dad investors. This is not for small businesses. This is for larger companies. Now, the investment banks or merchant banks, they deal with a range of things. They They'll provide advice for businesses. They'll assist with mergers and takeovers. So if a business wants to, take over a larger business, then they can go to a bank like this and they can, get that information that they require. So there's a case study here on Macquarie Bank. This Macquarie Bank their headquarters are in Sydney. It's the largest Australian investment bank, and the bank employs over 13,000 staff in over 27 countries. Now, the first bit there that says Macquarie deals mostly with international finance, business loans for companies, and share underwriting. We have to remember that because of the deregulation of the financial markets, we can now borrow money from overseas. So we're not a closed market there. So Macquarie Bank is able to give you that information, but also research where the best place, I guess, to gain that money from, what's going to be in your best interest. You have to look at exchange rates. You've got to look at interest rates. So there's a lot of, a lot of things that need to come into account and come into play. Now, with finance companies, there's different examples. You've got an insurance company such as AAMI, payday lenders such as Nimble, credit providers such as RAM. Now, what you find, especially with these payday lenders, they do charge you super, super high interest rates. So because they know that you're not desperate, but you're a little bit more desperate, they're going to charge you more for that. And you don't pay it off, then that interest rate keeps going up and up. So life insurance companies are companies that provide insurance for people in the event of death. So if you do die, your family is given a sum of money. So depending on what the agreed value was that they would receive. Now, these insurance companies, they get all your money week after week for your payment, and then they invest that money to potentially make you more. And they might do that through buying shares or depositing money in banks, which then those banks then lend to other businesses. Now, superannuation funds, when you finish school and you go out and you get a job, your employer's going to deposit money into your superannuation fund, and that superannuation fund is there for you to use on retirement. Now, these superannuation funds, they will invest all of this money that your employer is putting in, and then hopefully when you retire, you've got quite a large amount. Now, what we're looking at with COVID at the moment, we're looking at a lot of people that have lost a lot of money in super because the market has crashed or isn't as profitable. People that might have had $80,000 in super now only have $60,000 in super. So it's not a lot of money now, but if you've got a large amount of money and you're looking at retiring and you've lost a big chunk, then that's obviously going to affect you. But these superannuation funds, they will invest this money for you. It says here, after banks, they're the next largest group of financial institutions, obviously because that's everyone works. So everyone is getting some money into their superannuation fund. Now, with unit trusts are basically a whole lot of people that put their money together in one fund, and then that fund is then invested out there. So if I've got $10,000 and you've all got $10,000, we can all put that money into a trust, and then we can lend that out to people. So it's also known as mutual funds. So you might actually see that term in some of the textbooks or some of the notes that you have, but it also just means that we can grow our money probably more than we would if we had put that money into the bank. So the money that the people that this is lent to are paying more interest than you would get if you put some savings in the bank. Now, this is the end of this lesson. I've given you a couple of activities that I want you to complete, but I will also put up your finance template just for you to have in case you have lost it. But I just want you to keep up with your notes. And tomorrow we'll start looking at influences of government.